Today's video is brought to you thanks to ChangeNow.io, a non-custodial exchange that supports more than 160 cryptocurrencies with no account needed for instant cryptocurrency swaps, along with fiat to crypto purchases. They have 24/7 customer support and are partnered with popular multi-platform wallets, including Exodus, Trezor, Ledger, Atomic Wallet, and more. Every exchange grants you now NOW tokens, which grant special features and bonuses on the platform. You can learn more about ChangeNow.io or use their platform via the link in the description. Hey everybody, it's Mattie here with Altcoin Buzz. Happy Friday. Hope you've had a great week so far and that you're gearing up nicely for your weekend. So today we're looking at really Bitcoin from a macro perspective, and we're taking a look at a few different things, including transaction volumes. We're looking at some price analysis and what some people have to say. And of course, we're getting caught up with news about the ETF, which is always evolving and always changing. Let's begin here today on blockmanity.com. VanEck's Gabor Gurbax states 6 ways in which a Bitcoin ETF would serve the public. So I think as many of us know by now, the CBOE, they've resubmitted their Bitcoin ETF application with the SEC. That's after they withdrew their original application on January 22nd. Gabor Gurbax here is the director of digital asset strategy at VanEck Asset Management. He took to Twitter to explain why a Bitcoin ETF would serve the public and be a positive development in the crypto ecosystem. So here are the 6 ways that Gabor Gurbax feels that this would be the case. Number 1, it would mean increased liquidity using the ETF ecosystem. Liquidity is something that I'd say is not a strength in the crypto space. It's certainly not a strength for a lot of the altcoins that we cover. And as far as Bitcoin goes, I think liquidity could be stronger as well. Reason number 2, lower counterparty risks. ETFs are a safe way to invest into assets as they are regulated and trade on large exchanges similar to stocks. Number 3, better valuation and execution practices. I think that can be said without elaboration. That makes sense. Number 4, separation of duties. Trading, custody, and valuation. A cryptocurrency exchange has to deal with trading, custody, and valuation, whereas with an ETF, different players in the industry are delegated with duties specific to their expertise. Number 5, transparent fees. ETFs are usually cheaper than mutual funds and types of investment vehicles and work on the fee-based model, which means increased transparency. And number 6, established compliance framework. In related news, here we are on ambcrypto.com. Bitcoin SEC commissioner says that Bitcoin ETFs might eventually be approved. So this news hit the crypto universe via a long interview discussion between SEC Commissioner Robert J. Jackson Jr. and Congressional Quarterly, which was scheduled to be published on February 11th, 2019. We're not even there yet. However, a Twitter account holder named Drew Hinkies got hold of the interview draft, which was shared across social media. You may have seen this image by now. Here's the headline. SEC Commissioner Jackson, in an interview to be published next week, is optimistic that a, quote, fund based on Bitcoin will eventually be approved, expresses concern about the proposed ETFs submitted to date. Now, it's possible this is all a hoax. It's possible this is all a publicity stunt. But if there's any shred of truth to this, hey, that's a great person, an SEC commissioner, to be leaking this kind of information, or perhaps just inadvertently leaking this kind of information. But according to the interview, Robert J. Jackson Jr., a lone Democratic commissioner at the agency, said that several crypto-based ETF applications were up for consideration to get the SEC approval, but it was not mentioned in the interview draft which specific application stands the highest chance of getting the particular approval. He also said, quote, a fund based on Bitcoin will eventually pass muster at the Security and Exchange Commission despite the agency's actions to deny all previous efforts. That is a very concrete quote. And again, this isn't coming from a nobody. This isn't some obscure opinion from somebody that doesn't really stand to influence this decision one way or the other. This is coming from an SEC commissioner. So as far as the rumor mill goes, this one may be worth at least paying attention to, and we can see what happens with it. Bitcoin ETFs are not a new form of proposition push forward, as several ETF denials have occurred due to the SEC's fear of market manipulation and unreliable price discovery in the industry. However, Bitcoin ETFs have started to fight the SEC's consensus notion that Bitcoin markets can be manipulated. Jackson also said, quote, "The BZX exchange argued that Bitcoin markets are inherently difficult to manipulate, but the SEC found that the proposal doesn't establish the kind of surveillance common in stock markets, and the commissioners also were concerned with the lack of liquidity in certain Bitcoin markets, their trading volume, and the ability to safeguard proprietary information." I understand that there are still concerns, and those concerns are still valid, no doubt about it. But this is a great little piece of interviewing that we've uncovered, if indeed it is true. And again, I'll say it one more time, a fantastic champion to have on our side, if in case that is what Mr. Jackson is. Good news as far as I see it. In the world of transaction news, Bitcoin transaction block approaching all-time highs. Fees remain minuscule. This is a pretty good development that's really flying under the radar here as far as reporting goes. But transaction rates on the Bitcoin network are approaching all-time highs. That's good, even as transaction fees remain noticeably low. That's also good. Data from the Bitcoin blockchain show today. Based on the data, we can see that the last time average transactions per block approached today's level, well above 2,000 per block, transaction fees were far higher. Whereas today, only 17 Bitcoin total have been paid as miners' fees from the entire Bitcoin network. Over 1,000 Bitcoin were paid to miners during the very beginning of 2018, during the height of Bitcoin's mania and price explosion. That's a very big difference. So although using Bitcoin for an end user is fairly simple and easy, the process of collecting, sending, and mining transactions, as you may imagine, is quite complex. Thus, it is not immediately intuitive to understand these trends. And if you want to read more about the technical details, then of course you can do so. But I just wanted to mention this in passing. It's a very good thing that transaction volumes are high while the fees are what they are. You can also read about that here on transactionfee.info/charts. You have the Bitcoin transaction per day. Here we're looking at payments specifically, and you can read about how the payments are calculated as a metric. What does the metric SegWit spending payment mean? You can also look into that as well. That's getting a little bit granular for the purposes of our video today, but to dive deeper into this, if it's something that interests you, is my recommendation, and we will link to this below. As always, guys, there are a number of different opinions in this space when it comes to the analysts. So here on dailyhodl.com, we're talking about Bitcoin price. Long-term analysis points to BTC bull run in late 2019. That's possible. And if that is the case, then we're still in an accumulation phase. At least that's how I see it. But as always, there are different ways to interpret data, to interpret the same information. You have other people saying, analyst here on ethereumworldnews.com, Bitcoin most likely to bottom at 2,400. Perhaps that's still compatible with the last article. It could bottom to 2,400 and see a bull run in 2019. Just want to highlight the fact that many different opinions here are on display. If you've not read this article by Luke on altcoinbuzz.io, you have JP Morgan that has now re-entered the discussion, and they're predicting a Bitcoin comeback. So Nikolaos Panigurtsoglou, an analyst at JP Morgan, believes that more participation by institutional investors in the cryptocurrency market can happen in the future. He said the following to CNBC, quote, "The stability that we are seeing right now in the cryptocurrency market is setting the stage for more participation by institutional investors in the future. The cryptocurrency market was a new market. It went through a bubble phase and then burst. The big obstacle is regulators right now," adding that a regulatory oversight is a bit slow to realize. You can read more about Luke's article here and leave your thoughts about it in the comments below. As always, you can also read about this on coingate.com. Bitcoin historically oversold this level, technical analyst confirms using RSI indicator. We'll link to this as well below if you're interested. And that's all the news today that's worth sharing, guys. As always, make sure you're following us on Altcoin Buzz and Altcoin Buzz News. Those are our Twitter handles. We're also on Facebook and Instagram and Telegram. Our website is here for you to check out, altcoinbuzz.io. Our last video is here if you haven't seen it already. Be sure to like, share, and subscribe. Smash that thumbs up if you enjoyed today's video, and I wish you only the very best of luck if you choose to invest on this Friday. But enjoy it, guys. Members of the Altcoin Buzz Army, have a wonderful Friday, a wonderful end to your week, and I wish you a great start to your weekend. We do hope to see you again soon, as always, in our next video. Take care.